Hi viewers, this is Swati Hodkar and Senior Equity Technical Analyst at Nirmal Bang. Today we are just coming up with the explanatory tutorial videos, and being a technical analysis, I am just covering the overall basic concepts of what is the technical analysis, difference between the technical analysis and the fundamental analysis, and the two important indicators which we are going to be used as an analyst while generating the technical calls. Now to start up with the what is the technical analysis and the fundamental analysis, I will just give an overall view. The technical analyst identify the trends of the market as well as they study the patterns of the markets or the stocks, we can say. They just find out the tops and the supports and the resistance along with the analysis of the different kinds of the stocks. Whereas the fundamental analyst, they just measures the intrinsic value of the stock through the method of the, or say with the financial analysis data such as the ratio and studying the balance sheets and all those things. The major difference between the technicals and the fundamental analysis is nothing but we study the charts, whereas the fundamental analysis, they do study on the balance sheets and the ratio analysis, and according to their studies, we just carry on the calls. As of now, both the technicals and the fundamental analysis goes in hand. If we can say that if the particular stock is very good on the fundamental part, then we use the technical analysis to generate the signal whether it's a buy or sell. So whenever both the analysis goes in hand to hand, the outcome gets in a very good way. To start off with the technical analysis, I will just give an overall brief what is the technical analysis means. The technical analysis is nothing but to determine the stock price by just measuring the different three important factors, or say the parameters. First one is the market activity, second one is the past price, and the third one is the volume. Now what do you mean by the market activity? It means whatever the data comes into the market plays a very important role and which decides the market trend in the near term. Now I will just give an example of the market activity, such as every quarterly we come up with the monetary policy such as the CRR ratio, the repo rate. If the RBI governor cuts the CRR or the repo rate, it will directly dampen the sentiments of the traders or the investor, and accordingly we get the directions of the market. For example, if we get a CRR or the repo cut in the near term, then definitely the market will trend on the upside and vice versa. There are the many more examples, such if we are getting a monthly auto numbers, even at such the elections data or the elections results. So all these market activity play a very important role into the market, which will decide the market trend in the near term. The second important factor I mentioned is the past price. Price plays a very important role in the analysis of the stocks. If the price is moving ahead on the upward direction, then definitely we can say that the particular stock is trading in a upward trend directions. Where if the price is going on a downside, then definitely we are saying that the trend is reversing and it is coming on a downside. So it has been always said that on the technical analysis, if the particular price has been whatever behavior pattern in the past, it may continue in the future also. I will just give a little bit example on the price momentum. Say in the month of the March, we have seen that the Nifty was facing a very strong resistance of 11,000 psychological mark. And once it manages to give a breakout of that level, we have seen that the Nifty has rallied from 11,000 to 11,850, which is as of now it's an all-time new high. Now currently we have seen a profit booking into the Nifty from 11,800 towards 11,150 level. Now that 11,000 psychological mark, which was acting as a resistance in the past level, now it will become a support level. So that the past price or the indications will play a very important role in the future also. So we need to keep a continuous track on the price movement as well. The third important factor I mentioned is the volume. Now volume also plays an important role into the price momentum. If the volumes are moving ahead along with the prices, then definitely it gives a clear-cut indications of the breakout. If the price and volumes are going on higher direction, then definitely it's a buy sell, or we can say that the particular stock has a strength on the upside direction. If the price is coming down along with the volumes, we can say that this particular stock is coming down with volumes, then it is a clear-cut indication that the selling pressure is likely to be intensified in the future. So these are the basic three important factors we are looking towards while generating any calls on the technical parameters. Even the technical analysis observes the patterns and the charts and the indicators. Now what are the patterns we are looking on the technical charts, such as the head and shoulder pattern, inverse head and shoulder pattern, trend pendant pattern, flag pattern. Over a period of time, I am just as of now mentioning the names of the patterns. Probably in the future video I may cover all those patterns as well. But at the current level, these patterns also plays an important role, which gives the indications of the breakouts and the breakdowns for generating the technical calls. So as of now, I am just mentioning the patterns names. Now secondly, now what are the types of the charts we are looking as a technical analysis? There are the three types of charts. First one is a bar chart, second one is a line chart, and third one is a Japanese chart. As of now, all the technical peoples are just studying the Japanese chart itself because it gives a clear-cut indications of either a breakout or breakdown. The line chart also play an important role while giving, because line chart gives the prior confirmations before taking any calls compared to the Japanese. So the Japanese and the line charts plays a very important role while analyzing the particular stocks and giving the signals. So this is the brief idea about the technicals I have given it and the types of the charts. Now moving ahead, I am just disclosing about what are the important indicators we are looking on the charts while generating any particular call. The first indicator is the moving averages. Moving averages, if you have seen that on a constant basis on the media, we are seeing that a particular stock or say the indices is trading above its 50 days moving average or 100 or 200-day moving average. If a particular stock or the index is trading above its 50 days moving average, which gives a clear-cut indication that the trend of that particular stock or the indexes is the bullish. And if particular the stock or the indexes is trading below its 50 or say 100 or 200 DMA, then the trend of that particular stock is bearish. So the moving averages indicates the trend of that particular stocks or the indices. It also determines the supports and the resistance, which is totally provided by its 50, 100 or 200 DMA. Now the second indications I can explain you, it's about the momentum indicator. Momentum indicator such as the RSI. RSI is nothing but the relative strength index. The word itself indicates that whether the stock has a particular strength in this holding or say in that market is there or not. For example, the RSI pinpoints the two zones. One is the overbought and oversold zone. Now what do you mean by the overbought zone? If the RSI line crosses its 70 mark, then we can say that particular stock is trading into the overbought zone, which means there is a lot of buying has been done in that particular stock and we might see some profit booking in a near term. So it is a cautious sign whenever the RSI touches its 70 mark level. If when the RSI touches the 30 levels on the downside, it is known as a oversold zone. So that is known as a, probably we have seen a very good selling pressures and the stock has already sold off, and downside we might see some sign of a reversal, which is known as a oversold zone. So whenever the stock comes at the oversold zone, we might see some sign of a reversal on the upside, whereas when the stock goes on the overbought zone, we see the sign of the reversals from the upper level, that we might see some profit bookings. In this session, I have just covered the basics of the technical analysis, the difference between the technicals and the fundamentals, and the two important indicators which are majorly following while categorizing the stocks as well as while generating the buy or the sell signal. I hope this video has been useful to us, for you as well, and in the future I will definitely come up with the different studies and the parameters. Thank you.